Hey everyone and welcome to another video. Today I take you on a behind the scenes look at the on-chain data. What do we see in the data that we don't see in the price movements? Which way are we heading and what are the important points to keep an eye on when you look at on-chain data? But before we continue, make sure to hit that like button and subscribe to this YouTube channel if you do enjoy the content. And as you might know, we have removed the paywall on our trade letter. The trade letter is completely free, where you get the latest information about crypto, trading and investing 3 times per week. Check the link in the description beneath if you are interested. Also, make sure to join Bybit, as we can give away 1 month of premium membership if you do. Last month we've made 11% in profits on the portfolio. Want to check that out for 1 month for free? Join our link on Bybit and you'll be added to our premium platform. Back to the video. It's important to know what's going on in the world. We look at the price, we look at the macroeconomy, but so today we also look at the data. Let's jump in. We know that Bitcoin has been in a tight price range for quite some time, but we also know that Bitcoin never maintains this for long. In the 8 Global Discord we already described that the on-chain data saw a volatile move to the upside coming, which was also very evident. Now, after this volatility started, I will take you through the story behind the scenes. What are the risks, or is this already the trends which we want to see, also based from macroeconomics, but we discussed that in a different video. To analyze how network adoption is doing, also called the network effects, which I covered in detail in an earlier video, we look at the number of new addresses on the chain. Because the more people using Bitcoin, the better it is, the more it's growing. In this first graph, we see a number of different things. The most important ones are the red curve, which shows the monthly moving average of new addresses. The blue line, which is the yearly moving average of the exact same. If the monthly breaks over the yearly, you have bullish momentum. The other way around is bearish. The perfect example is that you see this happening exactly before we had the sell-off in May 2021, which was the peak of the bull. Since then, we have not / barely gotten back above this. We need to get over this to get the momentum back, because new addresses drive new transactions, which drives network valuation, which drives price. We are not there yet, but we are getting closer step by step. If we then look further at the Bitcoin non-zero balance address net position change, a chart showing this adoption even more comprehensively, you can see that we are really in a period of stagnation now, in which there are virtually no new people joining right now in the markets, and we see that on social media too. But no people are disappearing either, as you saw in the 2018 capitulation, so a neutral period in which only the holders remain. But despite low adoption, we do see something remarkable happening within transactions. If we look at the mempool and total amount of coins, we see that since September, the volume of coins within transaction is starting to shoot up, and also the numbers of transactions is shooting up currently. These charts indicate a small change in momentum and thus the potential for a change in direction, especially if you think back to the first chart, where we are just below the yearly average. This is very interesting to keep an eye on if you want to look at investment purposes for Bitcoin. Now we do a step aside toward the miners. We know that the Bitcoin hash rate is at an all-time high, and also mining difficulty toward all-time highs. This means that Bitcoin production costs are getting higher and higher. Cost of production and price of Bitcoin are now equivalent at 19k. The last time we saw this, where the price fell below the cost of production, we saw a minor capitulation equivalent to the middle of a bear market. And maybe this time it's different, as miners have already been capitulating massively in the past period. Some miners even dropped by approximately 80% on a day the past period, as they can't keep up the production as energy levels, as you know from the other YouTube videos on the channel, have been accelerating upwards. In that case, research shows that we might be going to get another capitulation taking place. But why should we actually get one again, as we have already been seeing this? The markets have been showing a ton of strength in the past months, and quite frankly, to realize what we are doing right now is that we are still hovering around the current levels due to the fact that the Luna crash took place in May. If you remember correctly, that started at 40k, while we are currently hovering around 20k, a drop of 50%. This current consolidation is a sign of strength, and already mentioned that miners have been capitulating over time. This capitulation doesn't necessarily have to happen due to prices falling down, but also time is a big capitulation trigger. The longer the market remains flat or downward trending, the more people have to capitulate due to the time passing by. That's what's happening right now, and due to that we are seeing the massive outflow of retail in the crypto markets, but also miners were collapsing as a whole. What we want to see is a change in behavior, which is the power of on-chain analysis. Here you can see the trend accumulation score, and we saw that the price had not changed, but the color code balances are starting to change. We see that all the wallets are slowing down with distribution, and the rest are starting to accumulate quite nicely. This started in October of 2022. People are starting to feel a little more comfortable because Bitcoin has practically become a stable coin and is holding the current price levels for more than 4 months already. So what can you clearly see in this data is that even though not much is happening in terms of price movements, a lot is happening behind the scenes, and that is being reflected into on-chain data. We see the miners are under pressure, there's little new activity on the network, yet step by step the number of transactions is starting to increase slightly, in which we are starting to see a change in behavior across the board. We also see that on-chain analysis shows that the market is in an accumulation phase and that you might be looking to accumulate the position as we speak, despite the fact that social media says something else, in which social media is always shouting for lower numbers and is always reflecting the actual opposite of what you might be doing in the markets. In the next on-chain update, we will look further at the behavior and the changes. For now, you are fully updated again on the on-chain markets and on-chain analysis. Thanks for watching. Make sure to check out our free trade letter and our 1 month for free on the platform, and I'll see you again with the new content in the coming week.